opening on our brand new collab show between Business Today and India Today TV. It's 9 a.m. and we're here to get you ahead of the curve as markets kick off trading for the day. First, let's take a look at what's hot in the corporate and financial space this morning. The U.S. Federal Open Market Committee cuts interest rates by 25 basis points after keeping it unchanged for 5 consecutive meetings. Rates likely to be slashed by another 50 basis points by December. The U.S. Central Bank has warned of higher unemployment, higher inflation, but has also raised its economic growth forecast. The Fed is also ironically reducing its own staff by 10%. Investors on Wall Street sell on news, with 2 of the 3 big indices declining after the rate cut. Index futures, however, bullish on expectations of half a percentage point further by the end of the year. Strong start to Asia this morning as well. Gold declines from record levels after the Fed's much-anticipated cut, after briefly spiking to a fresh record of $3,708. The precious metal fall nearly 1%. Price is likely to tread a similar path in the Indian market today. AI hardware giant Nvidia slips for the 3rd straight day, with China cracking down on its chips. Shares fall after reports say that China's internet regulator has banned the country's biggest tech companies, including ByteDance, Alibaba and others, from buying the RTX Pro 6000D, its custom-made artificial intelligence chips, from the Chinese market. Families of 4 passengers killed in the Air India Ahmedabad crash have sued Boeing and Honeywell, the company that made the fuel switches, in a Delaware court in the US. According to Reuters, the lawsuit blames a faulty-looking mechanism in the switches, which the US aviation regulator has given a clean chit to for the 12th of June crash. All right, a quick look at the global market action overnight. Remember the much anticipated Fed meet giving mixed signals. We did see a sell-on news effect coming in. We've had the S&P 500, Nasdaq closing lower, while Dow's maintained somewhat of an uptick at about 0.6% higher. Let's look at Asia this morning as well and see how it's doing post all the news coming in. And those are, of course, your tech majors in the US, slightly mixed coming in there. And remember, Donald Trump wanted this rate cut, and it's the first one in 9 months. It was an 11-1 vote, with the sole dissenter seeking a 50 basis point cut. Importantly, there are indications that the rates may be cut by another half a percentage by the end of this year. The Fed chairman also raised some red flags. Let's listen in.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June.
Well, let's decode the Fed news for you. A big market trigger. Radhika Rao, ED and Senior Economist, DBS Bank Singapore, joining us this morning. Radhika, good to have you with us. As usual, the Fed, of course, giving mixed signals to the market. Clearly, they're also still wading through and trying to decipher the economic scenario. What's your key takeaway from the meet and the commentary?
Hi, good morning. A certainly very important meeting. Like you already mentioned, it's the first one in almost a year after they had cut about 100 basis points last year. And I think we were looking at 3 takeaways from the meeting. The first being, what is the move? We saw now a 25 basis point. Obviously, there was a small minority in the market who were of the view that it could be a more aggressive 50. The second was, how are they going to balance a weakening labor market, but signs of higher inflation? What you saw, in fact, is that the markets actually, when the decision was announced, you saw the dollar correct, you saw, market expectations switch towards expecting more rate cuts. But at the press conference, when we heard Chief Powell speak, then you had actually seen a bit of a drift back up, because there was then the view that they are not as dovish as it was expected. And the third point that we're looking for is how does the board actually vote? Do they vote towards a rate, how many of them vote towards a rate cut? And what you saw is actually one dissent vote by Mr. Stephen Miran. The rest of the team actually went for a 25 basis point. So these were the three takeaways, not as dovish as expected, as markets had anticipated. And we were looking for a 25 basis point, and that pretty much played out.
So, Radhika, help to decode this for some of our viewers in terms of, when it comes to those key economic factors that the Fed is eyeing. Is it once again the tariff impact that perhaps is leading to uncertainty and some amount of hawkishness from the Fed?
Yes, certainly. I think there is no dearth of pressure from the government, but I would think that the Fed is trying to, take a more center path because they are facing a very, I would say, a divided economic backdrop, where there are not clear signs that rate cuts are required because their own growth projections have actually been dialed up. Unemployment rate, same for this year, but next 2 years it's been, broadly in the 4% handle. Inflation numbers have also been dialed up. So the backdrop that they have presented with is quite divided. So I think that's why they are trying to take a path through the center. Tariff impact, for example, we do think it is still going to play out in the next 3 to 6 months at the least. So we haven't really seen that feed through right now. If you see the inflation breakdown, you're seeing pressures from some part through services, some part very selective goods that seems to be showing the pressure. So the tariff impact per se is likely to only show in the subsequent 1 or 2 quarters. So yes, certainly to your point, tariffs is an important watch factor. Balancing the pressure from the government is another. But I think in midst of all of this, a cautious approach, a data-dependent approach certainly makes a lot more sense. And that's why they're going with, 3 rate cuts, including 25 basis point that's already been delivered, and perhaps one more in 2026.
So one more in 2026, I think the market is going to immediately price in. But Radhika, forward looking from that, given what they're anticipating or the commentary that you heard, do you feel the Fed will stick to it? How much do you feel we're going to really see again a wait and watch kind of scenario? And also, what's your understanding of how the impact on the currency will play out as well?
Sure. So our own, house view is that the markets are pricing in a 3+3, essentially a lot more aggressive rate cutting cycle from the Fed, versus what the Fed is saying, which is going to be a 3+1, which is that they cut this year a little bit 2026 and then they hold. We are leaning towards what the Fed is saying, which is that we expect 3 this year, including what was delivered, and 1 next year. And for the dollar, our view, our FX strategist view has been that the dollar is likely to trend down. He did anticipate a bit of a consolidation in May, July, August kind of timeline, because a lot of negativity that was in the dollar was just about playing out. But hereafter, we do expect further dollar softness into the final quarter of the year.
All right, great. Radhika, thanks so much for joining us and helping us understand and decode the Fed's commentary as well as the impact going forward. We're just counting down to market opening. I've got Shell Bhatnagar also with us. Looks like a gap up in pre-open. Shell, given that this was the much anticipated meet, but we have seen a sell-on news effect, what's the likelihood of seeing that gap up come to light in just under a minute?
Good morning, Aabha. I think we are going to have a quiet day after the gap up. We've already rallied about 940 points before this gap up happened. So add another 110. That's a round of 1050 for the Nifty in less than 12-13 sessions. So enough is enough. Now a bit of profit booking. We are already at 2-week high. Therefore, I see that markets will be down a bit in today and tomorrow, and of course a lot of value buying happening in all sorts of PSU shares, profit booking,
and the opening bell ringing as well. Shell, talk us through the opening trades, because as you said, it's about 0.4% higher, but expectation that perhaps trending quiet after that, given recent highs that we've seen. Just talk us through some of those opening ticks on your screen.
Well, the advanced decline, Aabha, is really good. At the moment, 5:1, 1470 shares in the green versus 270 in the red. Out of 19 indices, 18 are in the green, and we are led by the IT index, the metals index, the Nifty bank. Out of the top 10 that make up the index, we have a slew of gains coming into Infosys, 26 rupees higher, 1548, TCS 15 rupees higher, ICICI, L&T in the green, HDFC Bank the highest weighted, up 10% in terms of all-time highs as far as the NSE 500 is concerned. Early, well, it's all the way auto and auto. Maruti fresh record high, Hyundai fresh record high, 26.59, and of course L&T Finance 243 for you, again a record high. Lots of gains across the board. You have defense counters doing well, Cochin Shipyard 1.6% higher, Zen Technologies 3.5% higher, and of course within the auto space and IT space you have Escorts, Persistent, and L&T Technology Services, Aabha, doing a great job early morning on the Lal Street. To you.
Okay, I want to bring up some of those newsmakers also, just to touch upon them. You mentioned auto. So Hyundai Motor India, they've signed a 3-year wage settlement with the union. Jindal Steel to rehabilitate the Hwange plant in a $455 million Zimbabwe deal. Just bringing that up because, some of those Jindal counters across the different Jindal companies have been in the news this week. And steel, of course, continues to be in focus as well. JSW Steel, meanwhile, to raise interest in the Illawarra coal holdings. That's about $60 million there for JSW. So let's pull that one up as well. And meanwhile, I think we had touched upon LTI Mindtree. They're going to launch an AI commerce center. So that one's in the news on that front. Yes Bank, a stake to rise to 24.2% for an SMFG post the Basque deal for Yes Bank. So let's see if that stock's recording any kind of uptick this morning. But looking at a slight stake uptick there in SMFG post the Basque deal. That's Yes Bank in the news as well. Let me welcome in Vineet Bolinchkar, who's joining us, Head Research, Ventura Securities. Vineet, good morning. Is the market playing out as you expected post the Fed meet? Are you disappointed, or are there slightly cautious commentary?
No, I think it's along expected lines, and we believe that India is going to be a bigger beneficiary of the rate cuts that happen in the US, because as the dollar declines, we are going to see a lot of money move into Asian markets. There is hope that FIs have been selling in India because of the valuation concern, but soon I think it's going to stop. And our market should start moving up from here again.
All right. So, we've been talking a lot about building up to some kind of Diwali high. And even if we are taking a little bit of a breather at the current highs that we've been seeing, what's your sense, Vineet, and where are you focusing? What kind of strategies, themes are you looking at over the next few weeks?
So, a couple of things that have happened is that the GST benefits that have gone have arrested the negative sentiments around the Trump tariffs. And with Trump team coming to India to negotiate, I think things are panning out well. And we will see banking sector because of that move rather well. Earlier it was expected to not do well. But right now we believe that they will do well. And from tomorrow, I think consumption is really expected to pick up once the GST benefits start trickling in the rate cuts. So the place to focus is on public sector banks. Two top picks out here are Canara Bank and SBI. Both of them are having their subsidiaries listed in the future. So we will see leg up there on both these stocks. We also like HDFC Bank. The NBFC space is also expected to do well. So I think the best proxy on the economy for playing the consumption theme is to play the finance sector.
Okay, fantastic. So talking about financials, let me go back across to Shell. Shell, Manappuram Finance, that one's in focus and on your list. We've seen a lot of buzz on some of these financial names. Why Manappuram in particular?
So Manappuram is...
Yes, Aabha, I think Manappuram is something... Manappuram is something
go ahead, Shell, and then I'll come back to Vineet.
Till about 4 months ago, Bain Capital purchased an 18% stake in Manappuram Finance, which is a gold loan provider for somewhere like 236 rupees. They poured in about 4,300 crores, and Aabha 55% uptick in Manappuram Finance year to date. This is a multi-bagger stock. Over the last 10 years, Manappuram has returned about 27% each year as CAGR return for its long-term shareholders. Well, why is it critical at this point of time? Gold prices are at a record high, and a lot of small borrowers are moving away from microfinance loans to gold loans, simply because you can get more loan with less gold pledged. And more importantly, the scrutiny that was happening in MFI gold loans, which is microfinance loans, is much higher than gold loans. Manappuram, in fact, has shown a surge in loans which are in the range of 2 lakhs to 5 lakhs, and that is something that is growing dramatically in the market as far as unsecured and secured loans are growing. So all put together, except for the negative, which is lower yields, which again is something that Manappuram is doing on purpose. It wants to attract higher strata borrowers, and therefore is reducing its loan costs. This is a stock that needs to be looked into, mainly because Bain Capital is now on the driving seat. Gold prices are shooting through the roof, and more importantly, gold loans are now acceptable in the broader market. So this is a theme that is going strong, already at a record high. You need to consult a financial advisor before you get into it, but this is a tailwind which is very strong in India, and especially in the NBFC space. Aabha.
All right, Vineet, let me come to you on Manappuram in particular. You also had a comment on that.
No, so I think most of it has been summed up very beautifully by Shail. So there's nothing much that I can add on to this. I think the valuations are also pretty decent. So, we like the stock as well.
Great. What else, Vineet, is looking good to you in the market? So much to choose from. You mentioned some of the themes that you were looking at, but some of the, other action-driven stocks this week. We've been tracking BEL. We've been tracking some of the tire companies and auto anchs. Of course, IT, that's another big one. Let's pull up that pocket because that's looking good this morning in particular. Anything appealing to you from the IT pack, Vineet?
So, although IT has been doing rather well, we are a little cautious on IT. We believe that there's a lot of negative activity happening in the US. Concentration to the US market is very high for the Indian IT stocks. And, we have headwinds from, H-1B visa, you have headwinds from AI, and, generally headwinds to the US market, because more than 50-60% of your business is coming from the US markets. And so we think that is a real red flag, and especially considering the fact that they're going through a lot of stress in that particular geography. I think investors would do well to stay away from those stocks. I'm not saying that they will not go up, but the risk reward in the domestic themes is far secure than what you get with the IT stack.
All right, Shell, what else are we picking up this morning? Yesterday was all about textiles and shoemakers and so on and so forth. Today, like you said, even though it might be a slightly more quiet market, any spots of action that you're looking at?
Well, Aabha, it's PSUs and PSUs all the way, and that's because these are the ones that provide a deep value at this point of time. Look at the rail side of the government business. You have RVNL 1% higher, RITES up about 1%. And within the PSU theme, there is a lot of activity that's happening on IREDA. This is a renewables financing company, 2% higher. Very strong moves coming into defense counters. Cochin Shipyard, no stopping it, 2.2% higher, 1932. PNB Housing about 1% higher. Apart from that, BHEL adding about 0.5%. So early deals yet in the market, but a gap up of about 100 points plus a 930 point rally. is now making investors and traders a bit cautious. We need to digest these gains over the next 1 or 2 weeks and then take it forward. Remember, it's Thursday. It's also the weekly expiry of the Sensex, and anything and everything with this, whether a rate cut or a record high on the Nikkei, is now baked into the price. It is time for retailers to come into the market and for big players, HNIs, ultra HNIs, to book some profit and shift it to banks. Aabha.
All right, great. Vineet Shell, thanks so much for joining us and taking us through all the market action this morning. It was all about the Fed meet. We've been counting down to that, and as expected, and therefore the Nifty seeing a gap up but likely to remain pretty steady through the day, given that the Fed didn't really come out with any major boost or surprise. A few other newsmakers this morning: Adani Commodities on a deal nod from the China regulator. Bandhan Bank has sold a bunch of shares for 154 million. So Bandhan Bank in the news. We were looking at Yes Bank earlier as well. Bandhan Bank has sold a bunch of Yes Bank shares, so that's why you might see a little bit of action on that one in particular. And they've sold that to Sumitomo Mitsui. So the stake is now down to 0.2%. Biocon has secured a US FDA approval as well, so that one's in the news. Let's pick up some of those names, Bandhan, Biocon, see if they're seeing any reaction on the stock markets this morning. And we can also take a look at Cochin Shipyard. They bagged a big order from ONGC to repair a jack-up rig. So Cochin Shipyard in the news, Havells in the news as well on land allotment. So that one also, of course, is something that one has to keep an eye on today. But that's all from us. A steady start this morning. Keep an eye on some of those newsmakers, and of course, continued traction on the index, closing the morning show just up about 0.5% or so. We'll be back to take you through all the closing action later. Thanks for watching.
Kara. Moto G96 5G. All eyes on you.
ये आपकी रक्षा के लिए और ये आपकी रक्षा के लिए।
अरे ये क्या है?
ये आपकी रक्षा के लिए और ये घर की रक्षा के लिए।
न जले न पिघले, घर घर को सेफ बनाएं। अपार अणुशक्ति फायर प्रोटेक्ट वायर।
मंगलती, दिल से